guys, I'm back with a housing forecast video for 2022. We're going to be talking inflation, we're going to be talking interest rates, and we're going to be talking inventory. All the things that are going to be either making you a really happy home buyer or seller or a disappointed home buyer or seller, but all information that you need to know to be successful in 2022. We're also going to be hosting a live on Wednesday at 6 p.m. In fact, every Wednesday at 6 p.m. So bring all your questions. And if you haven't already, go ahead and like, comment, and subscribe to this awesome channel so you never miss a housing tip in your future. All right, so to kick off the video, I want to talk about housing in general. So I know that there's a lot of mixed headlines regarding the value of homes, the stability of the housing market. And so I just want to talk about some basic facts. We are still in a market where the number of homes that are available for sale are dramatically under the number of people that want them. It's a simple math problem, a simple supply and demand issue. There is a low supply and a great number of people that want to purchase still. And so because of that condition alone, right, we are going to still see bidding wars, people who are willing to pay over appraised value. And it's still going to be a relatively aggressive market, which means that the value of homes should be going up in 2022. Now, if you look up, most economists agree with me on this disposition. And it's just because, honestly, we just haven't really seen a humongous slowdown. Despite interest rates going up, despite inflation, right, there's still this frenzy to get housing. Now, some good news on the horizon, and this is where it gets a little bit confusing, is regarding appreciation. So appreciation is the future value of your home. So this is not today's value. And so a lot of the headlines are saying that the home values are going down. And what they're really talking about is the rate at which the house increases in value over time. So because housing, right, for the last 2 years has been just so constricted and interest rates dropped at such a dramatic rate, we had an influx of people that were, one, able to purchase, and that two, just jumped into the housing market sooner than they would have. And so it was a crazy amount of demand. I'm talking about 60 people interested in one property. That has actually gone down, one, because inflation has increased the home prices and wages haven't kept up with inflation. And so there's one less number of qualified buyers in the market. People have gotten buyer fatigue, so they've just decided to withdraw from the market. And then interest rates have also impacted people's purchase budgets, right? So when you have lesser demand, right, it actually slows the pace at which a house will grow in value, okay? So just to give you some reference, last year was a historical year. It was double-digit appreciation, which is not considered normal or healthy. Okay, so this was a rapidly increasing, real estate market. And so some markets saw, up almost close to 30% increase in value, where other markets generally saw, 10 to 14%, which is still aggressive. A healthy, stable market is anywhere between 3 and 5% appreciation. And you have to remind yourself that this is on the total price of your home, not your actual cash investment. So people on their cash investments have been making more than 100% return in 6 months. And so that is just unheard of, and it's also unsustainable. So we don't want that to continue to happen. I know as homeowners, we love to see the appreciation rapidly increasing like this, but it just isn't sustainable. It isn't healthy, okay? So because demand has declined so much, right, we're now seeing most areas will still have double-digit returns. A lot of areas will now be somewhere closer to 6 to 8% return, which is still aggressive, right? But it's not at the quick pace that it once was. Now, bidding wars have also, calmed down quite a bit. And so, anecdotally, this is not, a nationwide survey. We're seeing lesser people bid for one home. So it'll be 10 people to one property or 5 people to one property, which means that your agent and you have a better chance of standing out, have a better chance of getting your offers accepted. So I do think that the climate for a well-qualified buyer is going to be a lot more friendly in 2022. So I want to dig in a little further into inflation, one, because it impacts directly what's happening with interest rates, and also because it's impacting home building, which is going to impact our supply. And so essentially, for those of you who don't know, inflation is the rapidly increasing growth of goods and services. And so we want to always have an economy that is growing, but we don't want it to grow so fast that we can't actually afford things. And so that is what the Fed, so the Federal Reserve, is in charge of. They're in charge of employment, and they're in charge of making sure that everyone can, have a sustainable economy where they're making enough money to purchase goods and keep that circle going. All right, so what has happened with COVID is that there was this halt in the economy, and because of that, the Fed took action and they started buying treasury bonds and mortgage-backed securities to stabilize the financial markets. Their purchase of mortgage-backed securities is what has been keeping interest rates artificially low at these historical rates. Now, when inflation gets out of control like it's been persistent and growing, right? And not just, keeping up or motivating people to purchase. Right now it's kind of gotten out of control. The Fed has to withdraw their asset purchases, which is what they've been talking about for the last several weeks. Their initial plan was a slow taper. Their December plan was a lot more aggressive because inflation again rose. And if you are a person who is interested in buying or selling, it's important for you to flag information on inflation and the Fed's decision to taper as a part of your guide on whether or not to lock in your interest rates. So just to give you some insider knowledge, but obviously, this is not a mortgage quote. When we get bad news, typically about inflation rising, the Fed will taper, pull out of mortgage-backed securities, and the market will rise in interest rates. So that is how fast it happens. It's typically, very knee-jerk reaction. So typically we see the biggest bump the day the news breaks, and then it'll teeter-totter for several days. But depending on how persistent the news is, or how many people talk about it, or how many notable economists continue to interpret what the Fed has said or what the news is showing, will typically dictate, how aggressive those interest rate inclines are. Now, if we've looked at the past, right, interest rates never just shoot up. They're normally like a staircase, but we did see a pretty steep incline in interest rates last year towards the very beginning of the year that we didn't really see a correction on for several months. So I just want you to pay attention to this. If you like your interest rate, if you like your monthly payment, I think in this type of environment, you lock in as soon as possible. So let's talk about how inflation impacts the housing inventory. So its number one impact is actually on new construction finance, and that's because building supplies are impacted by rising costs, they're impacted by import-export, and they're also impacted by taxes. And so we have some additional taxes on Canadian lumber that are impacting our housing supply. The import-export is, and then also labor, guys. Just finding the number of people to help us build and construct our homes, and then fighting against builder to builder on who gets the crew, right? So we're you're talking about bidding wars with housing, we're talking about bidding wars with laborers. And so I just want you guys to be aware that if you hear any supply chain news or any additional taxes on lumber or anything that has to do with labor or supplies, this is actually what's slowing down our new construction market. It's why builders have pulled back from the number of houses that they're building. If they can't nail down the cost of their homes, it's difficult for them to sell them. And then it's also difficult for the home buyer to nail down a price for their budget, right? So that will impact demand on new construction. So inflation is a really big deal, guys. It's gonna be the hot button next year, probably more impactful than any other news. And so if you are buying or selling, you'll want to pay attention to this. All right, so we've talked about interest rates, we've talked about inventory, and we've talked about inflation. So lots of big ticket items to pay attention to and things that we should break down in this week's live. So if you have any questions, have any comments, go ahead and post them below. And don't forget to tune in, like I said, Wednesday at 6. In fact, every Wednesday, don't forget to tell your friends, like and subscribe to the channel. And I appreciate you guys, and tune in because we have lots of amazing content for you this next new year. All my best, friends.